Hi everyone, Jonathan here from Blockdata, and I hope you're enjoying the Coin Summit so far. I'm going to be talking to you about some of the big ecosystems within blockchain and how they're maturing. So jumping straight in, that is where it's important to remember that blockchain is a new type of data infrastructure. And it's important to simplify the ecosystem down to that level when we're looking at the adoption and maturity of the technology. It forms a new data utility layer that anybody around the world can use that doesn't really regard physical borders as a limitation to how it operates. And at this point in 2021, we can fairly confidently say that the future will be built on blockchain. What we're now moving into is what we at Blockdata call the great asset migration, where assets that are based on traditional infrastructure will start to be migrated towards or onto blockchain-based infrastructure. This is something that will take time, but as it obeys the laws of network effects, the growth will be exponential. It's also important to remember that crypto is not just the application of blockchain, but rather there are many applications of the technology. And that this ecosystem is made up of the blockchains, which are layer ones sitting in the middle, which may also have the tokens, where then applications can be built on top of those blockchains, utilizing those tokens from the layer ones or building their own. And outside of actually the smart contracts and the blockchains themselves, there is a wide range of supporting services and innovation that is happening, leading to the growth and maturity and the adoption of the technology. And those supporting services are critical for the long-term future of this technology. So jumping into some of the data, here are some key funding trends that are showing ecosystem growth. First and foremost, 55 out of the top 100 banks are investing in the blockchain and crypto ecosystem, either directly or through subsidiaries. And here we can see some big names like BNY Mellon, that is also integrating crypto custody, or JP Morgan, that is building their own blockchain technology, or ING, that has been innovating in this space with applications like trade finance for quite a few years at this stage. And here are some of the companies that have been invested in by these top 100 banks, be that Circle, working on their merchant integrations, Coinbase, which we all know is IPO'd, or companies like Coinmetrics that are providing analytics into the space. The second one is that the second data point is that funding rounds are getting bigger, with FTX with their mega 900 million round, SoRare with their 680 million, Fireblocks 310, Genesis 431, and Bitpanda just below 300 million. And we can see that these are the biggest rounds, but we're also having rounds in the region of 100 million plus pretty consistently month over month. And the third big stat, which we released last week, is that in Q3 2021, this has been the biggest quarter in terms of blockchain and crypto funding in terms of equity investments. This is a very strong sign that the ecosystem is maturing and that there is a lot of maturity still to come. Otherwise, these investments in these rounds simply would not be happening. So what are some of the key innovation ecosystems that we think everybody should have a high-level understanding of? The first one is that, yes, we have stable coins within this ecosystem, but they are almost competitive to the central bank digital currencies. They're now increasingly being piloted, tested, and in some cases, moving into production. If we split this diagram down the middle, you can see that we have this CBDC ecosystem where they're running on permissioned infrastructure, taking either wholesale or retail CBDC, wholesale being for large interbank transactions of maybe 1 million to 1 billion plus, and retail focused on the consumers, where we can see that these wholesale integrations is being integrated by some of these larger organizations. These are key financial infrastructure players that are starting to run and, well, starting to work with CBDCs and involved in their ideation and creation. And on the right-hand side, we can see the stable coins, but the public infrastructure where those stable coins are then issued upon, which are also starting to be integrated by traditional merchants as well as crypto native merchants, which is critical for this SME adoption and integration of the technology, as well as corporate adoption and integration. This shift is being led by some of the major players in the financial space, from PayPal announcing that they will allow users to withdraw crypto, Visa that is now accepting payments with USDC, MasterCard saying it's facilitating cryptocurrencies on its own payment network that will be blockchain based, as well as quite a few others. And these are all announcements that happened either late 2020 or early 2020, moving into 2021. And we're fairly certain that we're going to be seeing more of this happening in the future. And this is why it's important, and how the ecosystem is maturing is we can choose any stable coin now that's currently on the market or coming to market. We can then integrate a merchant provider as a business, so I can accept that form of currency as a payment for my business services, to which I can then have and keep my crypto as crypto and not convert it back to fiat. And the reason why we can do that is because of these new accounting and tax toolings. And the last part, which is arguably the most important, is now the ability to earn interest on the assets that you receive as payment for your services, but keeping them in that crypto form, be that through decentralized providers or centralized providers that are working to put those assets to use to earn an interest, and more often than not, earning a higher interest than businesses can get from their traditional bank accounts. So why is this important, and why do we highlight this? Well, the maturity in these key payment areas of crypto is laying the groundwork for more financial applications in the future. And rather than users having to be crypto first, these are traditional payment services that can help onboard hundreds of millions of users onto blockchain-based payment rails. And these merchant integrations will lead to business adoption and integration of the technology, again, into their services. And this is what's laying the groundwork for the exponential adoption of technology in these areas. The next thing to highlight is what's happening in DeFi, and more specifically, institutional DeFi, where we have DeFi protocols, DEXs, and lending providers that we mostly all know about. But moving forward, there are quite a few providers that are creating support of KYC pools, which means that inside these DeFi protocols, the counterparties are always known. And this is critical for compliance when institutions are entering the space, because for them, in terms of the regulated capital that they're deploying, transacting with known counterparties enables compliance and allows them to adhere to regulation. Then we have staking providers that are also providing more and more mature solutions to be able to deploy capital and stake in secure managed environments. Down the bottom here, we can see that the services that are supporting, be that custodians or well as KYC and KYT providers, are also maturing and are valued in the billions of dollars. This is important because we're moving towards a DeFi ecosystem that is compatible with regulation and the compliance requirements of institutions. And due to the innovation that is happening in the space, there is a simplification of the technology, and as well as the onboarding requirements, be that crypto to crypto or fiat into crypto, allowing broader access to these products on both the retail and institutional side. And when we look at the low interest rates, and we look at kind of the way that the financial ecosystem has matured over the years, it seems that the narrative is starting to change to the fact that this is just a natural evolution of financial infrastructure, where we're relying on shared sources of truth, blockchains, versus traditional black box systems for that key transactional data, which is going to lead to reduced costs, both of reconciliation as well as issuance of new financial assets. The next area that we're going to look into is these new generation of NFT platforms that where the top two combined have already had in Q3 of this year actually have had over $10 billion worth of transaction volume. And we can see across all of this in this comparison that lots of them are running on Ethereum. They've been around for quite a few years at this point, and although we do have some new entrants, and we have large amounts of active traders that are actively engaging in these marketplaces. And this is a very strong sign, despite the initial bump in 2017 with the origination of CryptoKitties, all the way moving into 2021, where earlier in the year there was one initial hype. And now as we're moving into the latter half of this year into Q4, we're seeing the volumes get larger and larger every single month. And it's not only these, let's say, consumer-focused NFT platforms that are gaining attention. Corporates are also looking at NFTs for 4 major applications. The first one being supply chain, where products can be individually authenticated, which can be helpful throughout the entire supply chain to know exactly what is what. In media and entertainment, Tencent is experimenting with creating audio NFTs within a marketplace ecosystem. When we look at fashion and retail, there is the fact that a unique digital identity can be created for fashion and retail goods. Or even when looking at IPs, intellectual property patents, it is easier for companies to buy, sell, lease, or license these patents if they are issued on a shared source of truth and where they're managed within a blockchain system. So we're starting to see the early indicators that this is not just a retail fad, quote unquote, but rather this is an actual technology that is going to have use cases within the corporate ecosystem. And this is important because 10 billion trading volume is quite a lot. And if we look at the increase from the previous quarter, that is a huge percentage. And that's where the NFT is still early in terms of its experimentation. But what we can see is that it's opening up new ways of monetization and audience engagement that were previously impossible or very hard to do, and or very expensive. And that is primarily based on the fact that there is a reduced cost when using NFTs of the creation of authenticated digital twins when it comes to representing physical assets in the digital world. And most importantly, that's where these assets can actually be held on balance sheets of organizations as financial instruments that have value. And we've seen that with, for example, Visa buying a CryptoPunk. So in summary, I've just thrown quite a lot of data at you, and I want to remind you that all of our research is available online, so just go to Blockdata. But this is an evolutionary change to the financial ecosystem. And resistance at this point from large organizations is going to be futile. And the sooner that companies start to accept the fact that this is inevitable, the easier it will be for them to find their place within this new system. The ecosystem is maturing at an increasing rate, and the funding graphs that I mentioned to you is a leading indicator showing that maturity is coming, and it's happening at an increasing rate. Blockchain and crypto can be compatible, or is actually compatible with regulation and compliance. When a transaction is made on a blockchain system, that is immutable and will be stored in that system forever to come. And this means that there is always a record of that information that cannot be lost. And this is important when we're thinking about, okay, is there settlement finality? Can I access this information in the future? But that is where it is becoming easier and more logical for businesses to adopt blockchain. And coming back to the maturity, this is what is going to lead to that exponential growth that we spoke about earlier. Well, thanks ever so much. And one final note is that, if you want to be mentioned in any of our research, please come along and go to Blockdata and start to claim your profile. We're always interested to talk to people that are looking to adopt the technology or companies that are looking to, that are building the technology. Thanks a lot.